When do you expect that all of these issues around supply chains, of course, the shortage of labour, do you have any clarity, any transparency at this point as to when those start to be ironed out and when you can get that capacity back online?
Yeah, well, first of all, Tom, thanks for having me here. I really appreciate being on the air today. I just wanted to say, congratulations to our team. It's been an incredible time the last 2.5 years, and to be able to get the company back to profitability, which was one of our major goals as we went into this year, to get the company back to profitability is really a great feat for us. So that's number one. Yes, we did pull capacity in the third and fourth quarter. We are seeing some, the demand is still strong. Demand is really off the charts. So the demand is still strong. But, we have some operational issues and things that we need to resolve. So what we've done is pulled the capacity down to give some relief to our team. We've pulled down about 2.5% in the third quarter and about 3% in the fourth quarter. So down about 1.5 points for the remainder of the year. That's to give us some relief to match the resources with the operational difficulties that are out there today. And, we don't know when we'll be out of it. So what we need to do is make sure that we have capacity that matches what the resources we have and what the operation issues that are out there to make sure that we fly what we need to fly for our customers.
Hey, Derek, Delta said today they're going to hire and train more than 2,400 pilots this year. That seems to be one of the biggest constraints when it comes to capacity. Do you guys have any clarity on what you have to do on the pilot level?
Yeah, there's two sides of it for us, because you have the regional fleet and you have the mainline fleet. We're hiring over 2,000 mainline pilots also, and we're ahead of schedule for that. So that's all about, on the mainline side, it's all about getting people through training and make sure that we get people all the way through training. That'll take a little while as we build up the training. Last year we had about 1,000 pilots that we hired. This year, 2,000 pilots. So you have to have the infrastructure to be able to do that. We're growing into that. We're going to be through that by the end of the year and hopefully beginning of next year to make sure that the mainline flying is back where it needs to be. On the regional side, it's going to take a lot of time. We have a big regional fleet, about 600 aircraft. We had about 100 aircraft down in the second quarter. That is where the pilot supply issue is going to be hit. We are working that. We've given increases to our regional fleet, our wholly owned regional pilots, to make sure that we can bring on pilots, and that's a lot of focus that the entire industry has, is to make sure that regional feed has pilots. The main line it's not an issue. It's the training. It's making sure we get everybody through training, and we're all working on that.
And Derek, you talked about that continuing robust demand, and we've seen that resilience, haven't we, from the consumer, just desperate to fly and travel again on the back of that pandemic. Are you seeing any evidence at all that that's starting to be eroded, given the higher costs, given inflation, given concerns about slowing growth in the US?
Not at all. We just guided to the third quarter of our total revenue per ASM being up 20 to 24%. It was up 22.7% in the third quarter. So we don't have a huge window to go out. We have a 90-day window that we look at, and we have bookings out into the holidays. There's no sign whatsoever from that perspective that bookings are declining or demand is not there. So demand is strong. It's continued to be strong. We plan it to be strong as we go into next year. We just want to get the utilization of the fleet back up to make sure that we can, match demand with the supply.
I can see the visibility for next year is going to be tough all around. And I'm wondering if we're going to be in a situation with the airline sector where all of a sudden you hire all these people, you train all these people, you're hiring over 2,000 pilots, then you ramp up capacity, and then all of a sudden the demand just isn't there, either because we're in a recession or because people don't want to travel by plane anymore, business travel may not come back, and then it becomes a cyclical story again. What's your level of confidence that that won't happen?
As we look at it right now, demand is so far outstripping supply that we would like to have more aircraft up in the air. I think the entire industry would like to have more aircraft up in the air. But we need to make sure that we do it prudently. We need to make sure that, we match the resources we have with the supply as we put it out. And obviously the operational challenges that we have throughout the industry. So we need to match that. I think as those things subside, we can put the capacity back in to meet the demand. Now, if demand comes down, we will always adjust to that. And in today's world, we're flying less than we want to fly. But as we look forward, we have a lot of aircraft coming for delivery. We have a lot of aircraft that are on leases that can be returned. So we have a lot of ways to pull the capacity down if the demand is not there. We're not seeing that today, which is really good news, and we wish we could fly more. But it is really prudent for all of us to pull down the capacity to meet the resources that we have and make sure that we're, providing the customers what they need from an operational perspective.
Derek, just briefly, how do you see the difference, the demand in terms of the travel demand versus the business demand evolving and the impacts on airfares going forward?
Yeah, leisure demand is fully back, as everybody knows. The business demand is probably back. For us, we're over 100%, but we look at it a little bit differently. Small and medium-sized consumer or customers are back. Those businesses are flying. They need to fly to keep their companies going. Corporate demand is back at about 75%, so there's still a lot of room on the corporate side for that to come back. And even on the international flying, that's not fully back yet. It is growing. The second quarter, we saw some growth in that as we went forward, as things open up and as we see testing requirements change.
Yeah.
So there's a lot of growth still left in the corporate, and there's still a lot of growth left in the international that we see as we go into 2023.
Derek, I have one quick question. Fuel costs are crazy high right now. Would you be hedging? Would you start hedging fuel costs?
We have not hedged since 2006. It is back in that time frame. People had hedges in place, and really hedging is insurance. It's how much do you want to pay for the insurance and what does the insurance cost? At that point in time, you saw that effort. People had hedges in place. It dropped all the way down to $20 a barrel and almost put a lot of companies into bankruptcy. There is a natural hedge in our industry with fuel and revenues, and that's the way we're going to stay as we move forward. We're not going to go into hedging. In today's world, it would be very expensive, and the insurance isn't worth it. So what we do, and I think all of the airlines, you can see the hedging has gone down. There's only a couple airlines that do that today in the world. It would drive prices up, and it just doesn't cover what you want to cover from a fuel perspective, and that's driven.
All right.
We'll use revenues as the hedge for fuel.